Hello and welcome. So in this lecture video will be additional practice problems, okay? So we left off on page 75 of your course back in the end of the last lecture video, excuse me. And so I want you to do number 99 here, and then numbers 101 and 102 on page 76. I got a lot of work for you. Number 77 here on not number 77, number 151 on page 77. This is prepare the closing journal entries and then the balance of the capital account. So you want to look back at what we did in some of those prior lecture videos about using the adjusted trial balance to prepare those to prepare the closing journal entries, and then the determine the balance in the capital account. And then finally, I want you to also do number 154. Okay, so go ahead and pause the lecture video and try all those and then restart it, and then you can get to hear my fantastic explanations of each problem. Okay, thanks so much. Okay, hello and welcome back. So let's look at number 99. Company's ledger accounts and their end of period balances before closing entries are posted are shown below. What amount will be posted to capital in the closing process of closing income summary to capital? So what you have to do here is you have to calculate income. So revenues at $29,000, which are given to me right over there, $29,000 income. So again, $7,000 capital, $9,600 withdrawals, $29,000 revenue, $3,600 rent, $7,200 salaries, $920 insurance, depreciation expense of $500, accumulated depreciation of $1,500. Take our revenues of $29,000, less our expenses of $3,600, salaries of $7,200, insurance expense of $920, and depreciation expense of $500. Not accumulated depreciation. This is a balance sheet account. This does not show up on the income statement. This is not an expense. This is a contra asset account on the balance sheet. So revenues minus all these expenses gives us net income of $16,780. Then you have to think about the journal entry. The journal entry would be a debit to income summary of $16,780 and then a credit to capital of $16,780. So the right answer to number 99 is C. The hard part about this problem was remembering excuse me, that accumulated depreciation is not an expense. It's a contra asset account. It's in here because I'm evil and I like to confuse you. I'm actually just testing you to make sure you know what's relevant, what's not. That's not relevant because that is contra asset account, not an expense. Depreciation expense is an expense, but not accumulated depreciation. Okay. Let's look at number 101. So it says at the beginning of the year, company's balance sheet, following balances, total assets 125, liabilities 75, owner's capital 50,000. During the year, the company reported revenues of 46,000, expenses of 30,000. In addition, the owner's withdrawals for the year totaled $20,000, assuming no changes to owner's capital. What would be the balance in owner's capital at the end of the year? So we take our beginning balance of capital of $30,000 plus $16,000. Why $16,000? Well, that's equal to my revenues of $46,000 minus my expenses of $30,000 right over there. And then I have my $20,000 withdrawals. And when I take my $50,000 plus my $16,000 net income minus my $20,000 withdrawals gives me $46,000. That would be the ending balance in capital, which is D is the right answer. Let's look at 102. So it says at the beginning of the year, Beta Company's balance sheet reported total assets of $195,000, total liabilities of $75,000. During the year, the company reported total revenues of $226 and expenses of $175. Also, owner withdrawals during the year totaled $48,000. Assuming no other changes to owner's capital, the balance in owner's capital at the end of the year would be what? Well, the first thing you got to figure out is what's beginning capital. That's the tricky one about this one. And so how do you do that? Well, you use the accounting equation. Remember? Assets equals liabilities plus equity. So we're given total assets and we're given total liabilities. So I can take my assets of 195 minus my liabilities of 75. That means equity, which is my capital, is $120,000. Okay, and I need that because that's my beginning balance in capital. Then I also need to calculate net income. How do I do that? Revenues of $226 minus expenses of $175 gives me $51,000 in net income. I have my owner's capital beginning of $120 plus my net income of $51,000. I'm given my withdrawals of $48,000. The $120 plus the $51 minus the $48,000 gives me $123,000 ending balance in capital. That is the right answer. Okay? So let's look at number 77. The adjusted trial balance of Saris Web Services is as follows. We have our cash, $1,170, supplies, $1,930, prepaid insurance of $600, computer equipment of $20,600, accumulated depreciation $5,400, accounts payable $325, Sarapolis capital $13,925, withdrawals of $4,800, services revenue $21,720, salaries expense $69,20, depreciation expense of $2,000, rent expense of $1,200, supplies expense of $800, utilities $950, and then insurance $400. And we need to do the closing journal entries and then figure out the balance. Okay, so to solve this problem, we debit services revenue for the $21,720, credit income summary for $21,720. Okay, and then what we do is we look back over here. So that's that $21,720 right over here. We add up all these. All these are our expenses right over here. We add up all of our expenses and we debit income summary for the $12,270, which is the total amount of our expenses. And then we credit each one of these expense accounts like that. Just like this. Okay. Then what we could do is we could do a T account to figure out how much is left over in income summary. So I got my $21,720 here on my credit side, my $12,270 over here on my debit side. Subtract the two, gives me $94.50. That is my net income, by the way, because that's credit balance in income summary. So then to zero out income summary, I have to debit income summary, $94.50, and then credit capital, $94.50. With a lot of these problems, right, when you're trying to get to step 3 to close out income summary to capital, I have a suggestion. Use a T account. T accounts are your friends. Okay? T accounts are your friends. Use T accounts to help you figure that out. Or you can just simply subtract it, but I think doing a T account does a nice job of visually representing what's going on. Okay? The last journal entry that we have to do is to close out capital, close out withdrawals to capital. So it's a debit to capital, credit to withdrawals, $4,800. And then what we want to do is to figure out the ending balance in capital. So we take our beginning balance of $13,925. Where did I get that? That is straight from here from the adjusted trial balance. Remember, we do our closing journal entries based on the adjusted trial balance. $13,925 right there, plus the $94.50, which is my net income, minus the $4,800 of withdrawals, gives me my ending balance in capital of $18,575. That is my ending balance in capital. That is the correct answer to part B. Again, T accounts are your friends. Use the T accounts. Okay? Use the T accounts to help you out. So then let's look at the last one, which is for our L. Armstrong. I don't know if this is supposed to be Lance Armstrong delivery services. That's what each time I have this problem, that's what I think of. So anyways, this one just says prepare the closing journal entries. But I also want to go over on how to figure out the ending balance in capital. Okay? So our closing journal entries. So again, let me go back over this. We have delivery revenue credit, $98,900. We have our office supplies expense debit, $28,100. Rent expense debit, $14,400. Insurance expense debit, $1,200. Office supplies expense debit, $1,900. Depreciation expense debit, $6,000. Totals $51,600. And then we're given our net income. Okay, we're given our net income right there of $47,300. Kind of made our job easier a little bit for part 3. and then we have our totals. Okay? So we can look at the first one that we'll do is close out our revenue account. So we debit delivery revenue, credit income summary. And then what I do is I add up my expenses, my $28,100, $14,400, $1,200, $1,900, and $6,000. I add up all those, and that becomes my debit to income summary right there. And then I credit each one of those accounts. And then we're told the net income, but you can also see by taking $98,900 minus the $51,600 gives me net income of $47,300. That's right. That's where we got this number. But the journal entry would be a debit to income summary for $47,300, credit to capital $47,300, and then the last one is our withdrawals. And to figure out our withdrawals, we had to look up here. We had $30,000 in withdrawals right up there. So it's a debit to capital, credit to withdrawals $30,000. And then here I'm showing you how to figure out the balance in capital. We were told right up here that had a credit balance of $117 to start off with. $117 plus the $47,300 right over here minus the $30,000 from withdrawals gives us an ending balance of $134,300. That is our ending balance in capital. Okay. All right. So I'm going to end this lecture video now, and then the last lecture video for chapter 4 will cover the classified balance sheet. Thanks so much. Bye.